Good morning. Would like to welcome everyone to IBR Search podcast webinar this morning regarding seniors housing industry and recent developments over the past couple of years, in addition to what we see as we look forward to 2016 and into 2017. As the moderator, I am joined by two of our subject matter leaders at IBR Search in the area of seniors housing. First is Brian Shoup. Brian is a co-founding employee of IBR Search and also Director of Market Research for the company. Along with Brian is Butch Edlinger. Butch has also been a client manager and relationship leader in both the affordable housing, development, investment and management sector, and over the past 2 years has helped lead our company into the seniors housing development, investment, and management industry. Gentlemen, say hello to our audience this morning.
Good morning, everyone.
Good morning.
For those that are just joining and for those that are unfamiliar with IBR Search, we've been engaged in the executive recruiting industry for the commercial real estate industry as broadly defined by equity and debt investments, real estate development, construction, property management, as well as acquisition across the broad spectrum of private equity, institutional equity, as well as vertically integrated private and public real estate development companies in the United States. So to get the topics started today and flowing, gentlemen, I would guess my first question and of most interest was to understand how did you come across or come about this series of topics that you wanted to present to our audience today?
If you don't mind, Butch, I'll take that. The biggest thing is we talk, our firm, we're across all asset classes. We do work in student housing, seniors housing, affordable housing, conventional multifamily, retail space. And we talk to a lot of executives across all different asset classes. And what we like to bring to the seniors housing is some of the ideas that some of these other asset classes have done in their own industry. Just take, a quick example, student housing industry. Back when I was in school in the late 1990s to early 2000s, I was living in some shack that was $200 a month rent. I didn't care if I got my security deposit back. But if you look at what the student housing industry has come today, 15, 20 years later, they got lazy rivers, they got all these amenities and everything. And if you just see the transition of that, I think seniors housing is going to go through the exact same thing.
Hopefully not worried about living in shacks, though. Why do you feel that this is an important series of topics to dive into for the seniors housing industry today?
There's really, from my perspective, a number of reasons out there. Obviously, that everyone knows the growth of seniors housing, if for no other reasons, being pushed along by the aging population. That's a given. But even working within the aging population, what you're finding is a different take on where the industry is going. Maybe it's by region, maybe it's by income. There's a various number of items there. But what we're looking at is really the new change and the innovation and what's going to allow your company to grow, what's going to allow you to gain new customers, if you will, is the changes from student housing, the changes from hospitality. Some of these items, they have found a way to capitalize on where our market is going, where the social impact is finding things. And a lot in seniors housing, it's always been what it always has been successful, it's been a good place for folks to live. But what we're finding is innovation is really starting to make a difference in this industry.
Recognizing your roles as executive recruiters and the typical aspects of what executive recruiting offers, was there any specific methodology or data mining that helped you to develop these series of topics we're going to dive into in the next 30, 45 seconds?
Yeah, I mean, if you look at, each all have our own specialty within the group. Wes, who was moderating, he does a lot in the conventional multifamily. He's actually a big part of how the student housing industry came to what it is today. Melanie Robb, who handles a lot of our conventional multifamily, and then Butch, who does affordable and seniors housing. We also got Brian Bukowski that does a lot of our hospitality. We all came together and just brought in thoughts from different industries. And that's what we'd like to share with you today, some of those innovations, some of those, how those groups are evolving within the industry to become different than what they have been and to set themselves apart.
Looking at some of the research that you guys have done, which is encapsulated in a several-page document that I'm sure would be made available to any participants after today's presentation, I see that you made specific allusions and reference to things such as customer service coming out of places like boutique luxury hotels. I see you specifically cited the Walt Disney Company. Can you offer some of the things that were learned out of that segment and how that today's participants from the senior space can learn from that?
Yeah, I'll take this one, absolutely. And I'm speaking of my scenario, just coming off a family vacation, and I was experiencing Disney for the first time myself. It was a Disney cruise, and I have stayed in recently in some rather nice boutique hotels. But what we're finding is that level of customer service, that level of really taking things to the next level in their own market segments has really elevated them. Anybody that's been on a cruise, I think, will say, I liked it, I enjoyed it, it was something I'm glad I went on. But you almost don't know the difference, you don't get to experience it unless you're there, the next level of experience. Disney really focuses on every age, every market segment. You think it's just for kids. There's a tremendous number of just adults that were on the cruise that I was surprised with. But what it was the level of depth of their customer service, the level that they took things to make it a great stay for yourself. Now, that was a week-long cruise for myself and my family. Obviously, at hotels, could be just an evening, but they take those extra steps. What we're finding is that the real organizations in the multifamily development, in this case seniors housing, you've got a longer impact to be able to reach people. They're going to be there at minimum for 12 months, but when you look at it, in many cases it's their life, and putting that extra service in to get somebody in the door, to get somebody to stay at your facility has a huge long-term opportunity for your company.
Is that more a function of extensive and deep programmatic training once employees get to your company, or is that a function of first identifying the spaces that already are performing those functions in best in class and then recruiting that talent to your company? I almost liken that to a bit of a chicken or egg. Can you guys comment on that?
I think it's a little bit of both. The chicken or egg is always a topic in this. One, I think you have to change the mindset of your organization. If you're going to become a customer service focused organization, that has to start with what you already have. If you want to bring someone in that has that customer service focus that can actually help develop that, I think that's great, but you have to have that buy-in of the current organization to want to bring in that customer service focus. And it does start with training. That's the biggest thing. If the mindset of the company is customer service like Disney, Disney, when we read the article and we send it out to you guys after this, it talks about how Disney trains every single employee on their parks to be customer service first, and then whatever their role is. So if you're a princess, or if you're a janitor, or if you're a guy that picks up the gum off the floors, your first job is customer service. So if someone needs something, there's a lost kid, someone needs pointing in the right direction, that's your first job. And then your second role is your actual, probably what your position title is.
So if I'm hearing you correctly, it's branding the functionality of that person's job, not just simply saying you're a janitor responsible for clean bathrooms or clean floors, but rather customer service, which is effectively carried out by making sure the bathrooms are clean or the floors are free of gum and residue, etc. Is that accurate?
Yeah, that is, and just to cite one more example from my personal Disney experience, the gentleman that took care of our room came in, changed the bedding twice a day, cleaned twice a day, which in itself was great service, but he took things to a whole nother level where any question we had about going to different ports, where to be somewhere, when to be somewhere, what to do on the ship, he could answer any question that we had, which really took it to the next level. And even when we left the ship, I think this is the big thing to note, he thanked us for being his guest. He didn't look at it from us being on a Disney cruise or being a Disney guest. He actually looked at it as we were his guest, and he brought that through with everything that he did for us.
So it sounds like cross-functional training with other departments, so guest services, amenities, maps, grounds, comes into even all the way into the housekeeping departments, if I'm hearing you correctly.
Yes, that is correct.
Brian, I think from some personal experience that you had, you referenced one of your student housing developer clients trying to take on a similar initiative in their operating company and perhaps even bleeding that over into their development and construction organization. They reached from outside the traditional real estate space to bring an executive from the retail sector?
Correct. A client of ours, a student housing company based in Austin, Texas, and if you know a lot about the student housing industry, it's not necessarily the hugest industry out there. So a lot of times what happens is when you go out to hire operations guys, construction, development, what have you, you're just basically trading people from different companies in the same industry. And you get a lot of the same thought process, you get a lot of the same mindset, and you don't really get anything new when you hire someone. You're just really filling a seat that might be vacant or new with someone that's already done the job, doesn't have a lot of new ideas, and just coming in to refill the person that you're replacing. What our client decided to do is they were looking for a COO for their company and decided to say, hey, let's not talk to anybody in real estate. Even if it's outside of conventional or hospitality or whatever, let's go to another completely customer service focused company that can bring in new and bright ideas. So we were hitting up all the big retailers like Target, Walmart, Sam's Club, Macy's, a lot of these big retailers that have customer service focused ideas. Maybe don't necessarily know the real estate industry, but they know the one thing that all real estate companies have in common, and that's the customer. So we started breaking down the target corporations, the big corporate companies out there, to find their the regional heads. Target has 5 regional heads that head up the country, and we went out and it takes a little bit of a different skill set to go out and recruit someone to say, hey, leave what you know, come into a company you don't know. But we placed one of the top regional 5 heads of Target Corporation with this student housing company based in Austin. He's been there coming up on 2 years, and he's completely revolutionized the way they do operations. Now, it was painful, for a lot of people when he came in because he came with a different mindset. He came from more of a big corporate structure into a real estate company, which sometimes are a little bit old school in their thought process. But he's really changed around the way they do business. And just to give credit to the CEO of the company that he actually went through with this. We've had other clients that heard of this concept of hiring someone completely outside the industry, but when they got down to it, they just got cold feet and they couldn't go through with it. So it does take a leadership to bring in someone from the outside and let them run with their ideas, which is what our client in Austin has done, and they've done really well for themselves over the last 2 years. A lot of change, a lot of different things going on within them, but they're doing great.
So you answered one of my questions, because I think that there's an underlying fear, and I do believe from our research that the seniors housing replicates student in many ways. It's somewhat insular. It's easier to hire from what you know. Even if you're talking best in class in seniors, there's potentially the risk that you're not going to interject new ideas. And so my question then was, what roadblocks would a CEO of an existing seniors company need to remove in order to allow some of the ideas presented today to take root? If I'm hearing you correctly, it's the CEO getting behind the idea early and then probably being willing to continue to support and walk the talk after the individual joins the organization. Are there any further comments you have relative to that concept?
No, and I think I agree with where both of you are coming from. It really does take a champion. In this case, it's going to take a top-down champion to get in, to make a difference and stand behind this change. if you think about just the concept of innovation itself is doing something different, than even your organization has done. Not every organizational leader is ready to stand behind something like this, but there are times when even in seniors housing it has happened. One of a large management company that I've been consulting with out on the West Coast has adopted some of these policies, but it was the CEO who adopted it and brought in an executive team that he really wanted to bring in for the purpose of customer service, of innovation and change. And his top team comes from a major retail company. It does come from a conventional market rate apartment group. And the last one would be from a major sporting goods retail chain. And he stood behind it, brought the right people. Now it's a company.
Great. Changing gears and moving on to kind of a further evolution of some of what we wanted to discuss today. I know that from my observations, I see the two of you traveling frequently to industry events in seniors housing, affordable housing, development, and the management side. I know that other of your peers are traveling to events relating to conventional multifamily housing, hotel investment development, hotel management. So I guess as a correlation to the senior space, clearly there's industry events specific to that industry niche, but it may be sometimes difficult to know what events around the seniors industry relating to these other spaces might be valuable and how you can get information in those spaces. Any recommendations that you can offer about how today's listeners can get outside of their normal routine to experience some of these topics and connections and ideas firsthand themselves?
Absolutely. And I think the biggest two groups that you guys know about that are listening to this are NIC, the National Investment Center for Seniors Housing, and also ASHA, the American Seniors Housing Association. I think a lot of you guys know about those groups. But the funny thing is, if you look at the attendees list for some of those, you'll see hospitality companies on there. You'll see conventional multifamily companies on there because they want to, just like you probably should know what they know, they want to know what you know as well. So they're going to different events. Some of the ones that I would suggest going out to and just picking people's brains. A lot of executives are willing to pass ideas around. And so one is the NMHC, the National Multifamily Housing Council. They put on both conventional and student housing events. We attend these, or individuals in our group attend these. And these are great just to bounce ideas off of. Say, hey, what are you doing in conventional? What are you doing in student housing? Where are you guys getting your ideas from? And what you find out is a lot of their ideas maybe aren't original ideas. They're getting them from somewhere else. When it comes to hospitality, there's really two major conferences I would suggest taking a look at or possibly sending someone to. Unfortunately, one just happened back in January. That's the ALIS conference, the American Lodging Investment Summit. And that's going to get you around a lot of the hospitality investors, operators, managers, and you can really get an understanding of what they're doing in their space to make themselves different. The other one is the lodging conference, which is an event that's, I believe, held later in the fall, and that's another good event to just get a better understanding of what other industries are doing out there. And, so that's some of the suggested events I would take a look at.
And I can speak real quick, just to follow up on that. As we're talking about some of the parallels and some of the differences, from my experience as well in affordable housing, which the largest conference out there in the affordable space is the Affordable Housing Finance Live, held in Chicago in the fall. But I've spoke with a lot of executives, and they're actually attending these conferences or looking at attending some of these same conferences. There's a lot of parallel between the two areas with affordable housing and seniors.
One of the things that I've observed, especially as a nascent asset class in its first maybe decade or so of evolution and perhaps seniors housing as it's getting into the high year of growth, when organizations talk about taking their professional organization or professional network to the next level, beyond just deal making and meeting with brokers, but actually kind of almost to some degree brainstorming and sharing what might be considered trade secrets, and I use quotes around that, air quotes, there's a fear or reluctance that we're giving away the secret sauce to our competitors. Can you guys comment on the remarks you've received both from the seniors space as well as other industries that you've cited here today on the reality and the truth of why that's really a myth and what we should be working to achieve as a coalition?
Yeah, I'll take that one. I think the biggest thing is you got to look at it as not just your company, but as a seniors housing industry as a whole. What's good for the seniors housing industry is going to be good for your company. And I know there's a lot of things that you don't want to trade secrets or anything like that, but there's a value to that. It's not like we're in a technology company where there's patents on customer service. There might be patents on maybe training styles or whatever, but I don't think there's any harm going to your competitors, going to people within your industry and saying, hey, what are you doing to make this better? Because if I go by the term rising tides raise all ships. If you can rise the tide within the industry by sharing ideas, it's going to help everybody. And one thing it might end up doing is pushing some of the people out of the industry that shouldn't be there. There's a lot of players, within the seniors housing or conventional or affordable that aren't just keeping up with the times. They're putting, subpar product out there or subpar customer service operations out there, and it could help, either raise them up or push them out of the industry, which is better for the seniors housing as a whole.
Yeah, and I was going to say the downside of that too is if there's product going out for customer service, that will negatively affect the industry as a whole as well.
Although I'm supposed to be moderating today, I'll offer a point of reference relating to student, which student housing industry 15 years ago was seen as Animal House, the John Belushi movie, and for that fact, most institutional investors and certainly major debt providers would absolutely not underwrite or touch the product, and therefore the developments were smaller in scale. You'd have to put together consortiums of multiple banks to fund and finance, and the equity was very, very private at best. Once the industry came together, and believe me, there was a great deal of pulling of teeth and having to hold hands to get the executive to speak openly in a room. But once 4 or 5 years of coalescing as an industry came together, that's when Freddie Mac launched its pilot program for debt funding. Fannie Mae followed suit, offering both of those programs exclusively to student housing developers. And then it was within just a very couple short years after that that the rise of institutional financing and exit strategies for buying large-scale portfolios from the developers came into play. So I really think it institutionalized the asset class into the multi-billion-dollar juggernaut it is today. And certainly don't see that affecting seniors from an Animal House concept, but there may be other things that affect your space that you want to, as Brian quoted, to raise the tide collectively. So unless you guys have further comments on industry coalitions or industry events, I'd like to kind of move on to maybe a third subject matter. And that is talking a little bit more specifically about the concepts of bringing in talent to your companies that can offer geographic diversity, product diversity, concept diversity as they come from sophisticated luxury and boutique and lifestyle hospitality, similarly from conventional multifamily, and any patterns or trends that you guys have seen relating to, again, geographic dispersion, northeast versus southeast, southwest versus southeast, and so on, and the patterns of skill set that you see in your recruiting activities for today's listeners to incorporate.
Sure, and this is another one of those areas we talked about a moment ago as far as, having those trade secrets out there. But if you're networking with organizations in other areas of the market, they're probably not a natural competitor anyhow. But what we're finding in our recruiting efforts and in a lot of our conversations with executives is that there are different markets out there in the country, different regions that do act differently. For instance, looking at the Southwest, they are much more focused about lifestyle and amenities and open air space as opposed to what is actually in the apartments. Naturally, their weather is different than what it is here in the Northeast, but they're able to focus on some of these different areas. Now, with that in mind, their product is different, but also with who they bring in is different. They would be much more open to bringing in somebody who's got some outdoors type of background or experience, or just talking about lifestyle as a whole, as opposed to just an apartment or community inside. So a little bit different look at things there. Traditionally, what we've been finding is more West Coast, Pacific Northwest. It's a bit more progressive. It's a bit more open. It's a different thought process than what you might find up in the North, the Northeast, or the Midwest.
I'll break out of my moderator hat for a second as well. And in our hospitality practice currently, we're seeing a migration of brand and lifestyle managers, which is a very prevalent position in the hospitality space, being recruited very actively into the conventional luxury multifamily segment right now, as multifamily companies looking to squeeze out the very last couple percentage points of market share available to them, are you starting to use brand theming and lifestyle differentiators as a way to differentiate their product. Very practically speaking, something that hopefully today's listeners can take away almost immediately and utilize, I wanted to talk about where we're at in the cycle to some degree. And then there's a series of questions, some bigger than others, but I'll start with the most micro. It looks as if from everything we can see that because of compression in the cycle, the real estate and overall investment cycle, that we're in a heavy construction phase right now. Can you guys offer any comments on what you've seen in terms of salaries relating for construction or development execution talent that are helping to bring projects into a more vertical realization?
Yeah, I'll take that one. We are starting to see a lot of push up in the the base salaries of a lot of construction people. The biggest thing that we're really seeing though is the back end compensation that some of these individuals are seeking to find within their compensation package. Long term incentives. I think a lot of these guys got they got hit hard back in '08 with the construction, and they just don't want to go on base and bonus anymore. They want to have some type of equity in the deal or some type of long-term incentive that's going to, maybe pay off if something does happen. We just placed an individual up in Chicago, SVP of construction, seniors housing, and that's what she was looking for. She was not necessarily looking for a huge bump in base salary, if any. I think she basically took a lateral move, but where she really makes her money is on the back end of deals. And we're starting to see that a lot in construction, development, and even some, asset management positions that we've placed people here recently.
However, structurally, though, it's realistic to say that some companies just cannot, for any circumstances, include folks in the long-term compensation stack. So is it fair to say that, particularly with very highly skilled construction executives, particularly high-density or high-rise urban-type properties, you're seeing a tremendous spike in base salary, what might last over the next 24 months? Is there any percentage that you see kind of on average in terms of salary increases if you're unable to offer long-term incentive through equity?
Yeah, we just saw this. We placed an individual up in New York City as a high-density position. They're doing a high-rise construction. And from here to now, it looks like it's going to be maybe one project, maybe two projects. So these guys are looking forward, saying, "Hey, this might be the last project I'm going to work on before the industry corrects itself like it always does." So they're looking for big bumps on base salary. If they're not going to get that long-term incentive, they want something up in the front that's going to incentivize them to make a move. When it looks really good, and they might only be on one project, but that one project's going to pay them off enough that makes sense for them to make a move.
Would it be fair to say to at least a budget, a 25% increase in those very specific positions?
Yeah, absolutely. I mean, there's such high demand right now that just to give you another example, we had a guy, similar position, high-rise construction guy, went in to resign because he got that 25% raise. He went in to resign to his current company, and the guy struck him a check for $800,000 to stay on to finish the project he was working on. And that's something that we haven't seen in years.
Somewhat counterintuitively, but also in tune with the market cycle, I sense that from your research as well as the overall executive search load that you're currently carrying, that there's a spike and ever so increasing in asset management hires, and to a large degree, as seen with student housing some years ago, and I would presume such with seniors, although you should correct me if I'm wrong, that the formalized function of asset management is really not an across-the-board function or position in a lot of seniors companies yet. Can you comment about asset management on a general level?
Yeah, a lot of the companies I'm talking to within seniors housing that have an asset manager is probably someone that's been with their company a while. They're good at the accounting side. They're debits and credits and all that good stuff. But what they're lacking is the strategic role that an asset manager should play. Especially with institutional money coming into the industry, they're going to want the biggest bang for the buck, and a lot of times that comes down to the asset manager. Not necessarily that they're the ones that are going to change around everything, but they're the ones that if you're using a third-party operations company to handle the management and the operations, they're the ones that are going to drive down on them to get the best results. And the same thing comes on the construction and development side. You need a strong strategic asset manager that's going to make sure that the construction and development process is going smoothly. But one firm we talked to, seniors housing company down in Dallas, they were considering replacing their asset manager because they were just more of a strong analyst that can go through the numbers but not really tell you what to do with them. But what we're seeing in in the student housing and the conventional multifamily space, that these asset managers are very, very important roles within their company to make strategic changes within their company, whether it be operations, development, what have you. But that's a role that's evolving. It's not just the pure numbers guy anymore. It's a strategic position.
It clearly is evolving, and I think it's different for every organization. I placed an asset manager up in Philadelphia recently with an organization fairly new to the role of asset management as a department. They've been doing some things hit and miss internally, but what I found in a lot of my recruiting was each company has a different form of asset management that they're using, but clearly it is going more strategic. It's becoming a higher position within the company where more often than not, you're seeing this person being more on the executive level and really making a difference. Yes to finance, yes running through the numbers and evaluating, but they're using that person much more in the forefront and looking at acquisitions or development. The person's involved all the way through the process, and it's really, if used properly, that position is becoming more and more important to innovative and growing companies.
Great. Thank you for your comments on that. So as we start to draw things in today and head for just a generalized wrap-up, I guess what I would like to know from you, and something you can extend to our listeners, do you feel that there's kind of a part two to today's discussion?
I would say yes. I mean, we were continuing to talk to executives regularly. The market is changing, and even in these different industries we're talking about, different asset classes, there are things that are happening that won't be the same 6 months from now as they are today. That really, I think that it's an ongoing subject of what we're discussing.
Do you think, when I look at not only what I listened to today, but also what I reviewed in the multi-page thought piece that you developed, there's a pretty wide range of subject matter, but at the same time focused on a couple key areas. Do you think, as the cycle and even just the course of the next several months move forward, are we going to be revisiting in the third or fourth quarter on the same subjects in a more deeper tone, given how things have evolved, maybe taking them to a level 202 or 404 series of discussion, or do we have additional talking points that are beyond these key areas? Can you offer any advice to our listeners?
I think it's a bit of both. I think looking at some of these general topics we're discussing, they will be more important probably 6 months from now than they are even today, as other companies are evolving, other housing groups are innovating. So the level of competition when you get to that point, going deeper will make more sense. But looking at it from the larger perspective, there's a lot more that we could be talking about, a lot more that we will be talking about at that point. And Brian, I know I didn't want to interrupt, and you had some thoughts there as well.
Yeah, I think we're just where we're at in the cycle. Things are going to change in the next year and a half. So we are going to start looking at different things, whether it be make sure we're not overbuilding, make sure the product that the seniors housing groups are putting out there is the right product. And with the possible recession coming in, is seniors housing recession proof? In some ways it is, because people don't stop getting older if there's a recession, but what the product that they're looking for, or the service that they're looking for, or at least can pay for, might be changing. So it's not necessarily, we're going to have these seniors that during the recession are going to have more money, they're probably going to have less than they do now. So instead of maybe changing the amenities in a positive way, it might be scaling them back so that it'll fit with their budget and their lifestyle.
And one example of that, Brian, is a couple early conversations I've had with folks of creating residents that are made for just age restricted now, which will lead to assisted living, but it's already built with all the plugins for different healthcare facilities. So that's something that we can talk about more down the road.
Well, I certainly will pretend that I did not hear Brian say the R word, recession. Let's hope that that's not in the future. Maybe the C word, which we'll tongue-in-cheek say for sure might mean correction. So that all being said, and in conclusion, I know that you guys are going to follow through with anybody that wants to reach you by email and through the standardized methods of phone to get further information on some of the industry organizations that were cited today. Further, if anybody needs access to our research documents, ability to obtain that from you. And then, of course, if anyone wants to have a more deep one-on-one discussion, explore these ideas and concepts further, you'd happily avail yourselves to a telephone call.
Absolutely. Yes, of course.
Well, with that being said, I'd like to wrap up today's webinar. Thank everyone for their participation, and we look forward to hearing you and hopefully producing more content as we go through the course of this year. Thank you.
Thank you.